Okay, so in this video, I'm gonna lay out all of the expenses and all of the income for a small in-state owner-operator that has 2 trucks. Okay, neither one of these trucks go out of the state, and both trucks run under someone else's authority. But this is a small owner-operator operation with 2 trucks, and so if that's what you aspire to be, an owner-operator, maybe you're looking to buy your own truck, and with the hopes of maybe in the future buying a second truck, then this video you'll probably find this video helpful, because I'm going to lay out all of the numbers of our operation, all the income and all the expenses for you. Your first expense, your monthly expense, and I'm going to start from smallest to biggest, is going to be your highway use tax, which is $550 a year. We only haul wood products, so it's $430 a year highway use for us. But we're going to break that down. We're going to use the figure $550, and that breaks down to about $45 a month. And just for the sake of keeping the numbers even, for this example, we're just going to call the highway use $50 a month, even though you're not paying it by the month. The next biggest expense that you're gonna recurring expense that you're gonna have to pay is for the tags on the truck. Now, the tags on the truck is $550, $560 to be exact. We'll just call it $550, and it's every 3 months, which is a total for the year of $2,240. So that breaks down by the month to be about $185. And just for the sake of this example, we'll just round that up to $200. So your tags are $200, your highway use is $50 a month. So we're at $250 a month right now. After that, it's wise to have a maintenance account, to be putting aside money every week, every paycheck, to cover breakdowns and incidentals. And I've been told by several drivers that a good figure to start with is $1,000 a month. Okay, so if you're a new owner operator, most new owner operators don't have a bunch of cash, and so the first order of business is to get some money behind you in your maintenance account, so when breakdowns happen, you don't have to go into debt to get your truck fixed. So at $1,000 a month for 2 trucks, that's $2,000 a month for maintenance. And then of course you have your insurance. The insurance for both of our trucks, both drivers, is $2,200 a month. That's a total of $4,450, and we'll just call those the set expenses. Those have to be paid every single month, no matter how much the truck runs or doesn't run. Now, as far as the fuel expense, of course, that is closely associated with the income as well. Meaning if the truck is not running, generating income, then it's not generating a fuel bill either. But on the other hand, of course, the more the truck runs, the more income it generates, the higher the fuel bill is. So the fuel bill is definitely connected to the income. So we're going to talk about both of those right now at the same time. Truck 1 is being driven by the owner, so there's going to be more profit involved in truck 1. Last week, truck 1 did $400 a day, which is $2,000 a week net profit, which for the month, in a regular 4-week month, is going to be $8,000 net profit. Now, last week, truck 1 spent $100 a day in fuel, which is $500 for the week. And of course, that's $2,000 for the month for truck 1. So truck 1 had a net profit of $8,000, and after the fuel came out of $2,000 for the month, that left a gross profit for truck 1 of $6,000. Now truck 2 has a driver in it, and truck 2 last week grossed $3,000, which in a 4-week month would be $12,000 for truck 2. Truck 2 last week spent $200 for fuel per day, which is $1,000 a week, $4,000 for fuel. Truck 2 also has a driver, so truck 2 also has a driver expense as well. Last week, truck 2, the driver made $1,000, which in a 4-week month would be $4,000 for the driver pay. So for truck 2, it has a profit for the month of about $12,000. $4,000 a month goes to fuel, $4,000 a month goes to the driver, which leaves a gross profit for truck 2 after the fuel and after the driver is paid of $4,000 for the month. So truck 2 is profiting about $4,000 a month gross, and truck 1 is profiting about $6,000 a month gross. So that's a total of $10,000 a month after the fuel expenses come out and after the driver expenses come out. So we're at $10,000 a month total for the business owner. And now we have to factor in the set expenses that have to come out every month, which we already added up to be $4,450. And so $10,000 profit left over from both trucks after driver and fuel comes out, minus the $4,450 of set monthly expenses, gives you a total of $5,550 for the month left after all expenses are paid, after all the insurance, the maintenance, the driver, the fuel, all of that stuff is done for 2 trucks. It's a gross profit at the end of the month of $5,550. What also still needs to be factored in after this is, of course, taxes. And then, of course, there has to be money left over for the actual business owner as well. No business owner is going to go through all of these expenses and all of that good stuff and not have money left over to put in his own pocket at the end of the month. So as you can see from this example, there's a lot of money made. $20,000 a month net profit is $240,000 for the year, but they have expenses of about $15,000 a month, total expenses. So that's about $180,000 a year in total expenses, which only leaves about $60,000 gross profit. And again, what's not figured into that is the taxes of the business owner. I'm sure the business owner wants to be able to save money every single month, and I'm sure they want to be able to pay their own bills as well. A couple of things that could actually make your numbers change and be different from ours is one, if you have a similar setup, of course, you can decrease the percentage of the driver's pay that's on your second truck. Instead of paying your driver a third, you could pay a driver a fourth. However, then it's likely to make it difficult for you to find a good, reliable driver, right? If you want a good driver, it's gonna take care of your truck and be responsible with your truck, then you're gonna have to pay him, okay? And the only way you're gonna get away with paying a driver less of a percentage of what the truck makes is if the owner has the truck on a job where the truck can actually make more. So those numbers, that number can be changed a little bit by reducing the driver's pay, but the truck is gonna need to increase in mileage so that a good driver can still pay his bills, right? A good driver can go anywhere and drive. And so if you want a good driver on your team, you're gonna have to have a setup where you can afford to pay them what they're worth. The next thing that could happen to change your numbers if you've got a similar setup is you could reduce the maintenance bill. Okay. Again, this goes back to having someone in the truck that is taking care of the truck. Okay. The maintenance account is not something that you're gonna need to put $1,000 into every single month indefinitely. Okay. In other words, if you're putting $1,000 away every single month for maintenance and you're taking care of your truck, once you get $20,000, $25,000, $30,000, $40,000 cash set aside in your maintenance account, you may not need to add in $1,000 every week because you kind of got enough cash set aside to be able to handle anything that can come up. And so the maintenance bill, if you can do a really good job over an extended period of time of taking care of the truck and keeping the maintenance down, maybe being able to fix some of the things that go wrong with the truck yourself, then you can actually lower the amount that you got to put into the maintenance account over time, which means you can put more money in your pocket. Also, something that can change your numbers if you got a similar scenario to this is you can find, and I mentioned this earlier, is you can find work that pays more per load or more by the mile. You're still paying out a third, but the third it'll be more take home for you because you're making more per load or more by the mile. I hope you understand that. Also, something that we're not factoring into this is, and this is kind of the last thing I wanna introduce into this scenario for the individual that's looking at this video, is there's no truck payment figured into any of these numbers. So of course, if you got a truck payment on truck 1 or truck 2 on either of your trucks, that's going to throw your numbers off as well. That's going to reduce some of your profit. Trucking is an industry where you can, as I've shown you here in this example, where you can make a lot of money, but if you're not really careful, all of that money will slip right back out. All of that money will slip right back out your hands. On the flip side of the coin, if you're taking care of your business and if you're handling your business for an extended period of time, doing what you need to do, taking care of your truck, taking care of your driver, making sure you got the truck on a route, on a load where it can actually make money and actually make profit, then after a few years of doing this, you can actually put away some money. Maurice Bay, the Helpful Trucker here. For more helpful CDL tips, go here or consider subscribing to my YouTube channel right here. You could have been anywhere else in the world, but instead you chose to be here with me, and I really appreciate that.